All right, everybody. Good morning. Really hopeful. A little rocky the first time last week, but if you can hear me and you can see my screen, let me know. I think we got it right this time. And don't be shy. All right, all right. Everything looking good too? All right, perfect. Yeah, the first time's always a little rocky. But I think we got it. I think we got it. And I'm always uh, I'm always pretty confident that it's user error. So, and it was, but hadn't used this before, so now I think it's pretty easy though. As a matter of fact, it's real easy. All right, all right. Give everybody another minute here to hop on. Let me see here in the pre-market. Not a whole lot happening today. Got the Nasdaq futures hitting 20,000. Remember way back in the day after the dot com, it was like, would we ever get back there again? And now look where we are. But good morning to all of you. Thanks, Ted. Hope we have a good trading week as well. We did pretty good last week. Um, Prime time crushed it, although we gave some back on Friday. But we knew that. We knew we still had a great week. So no complaints there. Options Gambit had a really good week. Finally, it's kind of been in stall speed for a while. And Smart Trades, we didn't put on any new trades, but the one that we do have on is going pretty well. Turned around nicely for us, and we'll kind of walk through a lot of that. One of the things we elected to do when we switched over to this platform so that we could invite a larger audience to come in and talk shop a little bit is try to focus some on. We used to talk a lot about the trades we put on, and kind of got away from that. So for educational purposes, we talk about. Want to spend a little bit more time when we can talking about some of the trades we put on, good or bad. Right? You're going to learn a lot more probably from the ones that go south than the ones that go well. It's important to talk about both. Um, and see what we can learn from it. Like I said, we don't always have great weeks. No one, well, I'm sorry. As I always like to tongue in cheek say, if you have a profile on X, I mean, you have great weeks every week, right? I mean, every trade, right? I mean, that's you never lose. It's incredible. It's like all 1,000% winners, and you're turning that $5,000 account into 100 grand every single month, right? So, except for them. So, but all right, I think we've given enough time here. Everybody that's going to be here is probably here. So let's talk a little bit about the market. Oh, by the way, a little trade idea. Big fan of trade ideas. So if you're always looking for trade ideas, come to the right place. Been keeping an eye on MSTR. MSTR could be putting in a little double top here after this rally. Whoa, hey, where'd you go? Get back here. There you go. Interesting spot to find support, but you can kind of see here right around, you could just call it 1450 ish, right? And holding there a couple times now, just like to go up top, something right around again, call it 1740 is holding us back. So we've got ourselves one of two things. Either one, again, a awfully adorable little double top here, confirmation, be a breakdown. Would prefer to see it below 1400 as well. I wouldn't want that, that kind of psychological number in my way. But the bottom line, nice close below the green line should mean lower. And using good old fashioned back of the napkin price targeting here, expect about a 300-point fall. So we'd be expecting to come somewhere if we just go ahead and call it 1,000. So flip side of that would be this is sideways consolidation before headed higher, right? So on that front, we'd be looking for a break above here, 1740. And from there, you'd be expecting to test the highs, right? The 2000. Based on what I saw from Bitcoin, I don't know how much confidence I'd have on the upside. Bitcoin looks like it's broken down as well. Exactly, guy. If you don't have an X profile, but if you're on X, it's a obviously I'm not the first one to tell that joke, but yeah, I mean, if you're on there, isn't it kind of amazing? But it's like all the get rich quick things, right? So easy. But I always love it when a real trader posts, "Yeah, having a rough day today, but seems like every other trader on X today made money. Weird." Yeah. But yeah, if you want to succeed, forget all this mumbo jumbo. Log off all the calls. Just go put an account on X, and you're good to go. Anyway, so little setup there to watch. Bitcoin seemed to have a nice, not that this follows Bitcoin necessarily tit for tat, but if you look, this, I can show it up here, but you would see a similar trend line that would look somewhat like this, right, on Bitcoin as well. Okay. And so if you look at that, you will see that Bitcoin broke below it maybe last week, I think. And doesn't necessarily mean, remember, breaking a trend line does not necessarily mean end of overall trend higher. Could be just end of this version of the trend, the slope, in other words, could just be moving sideways for going higher. However, I think we all know that commonly when that happens, good things don't tend to follow. Right. So, but yeah, so that's that. All right. So let's get back to the market here. No real surprises. As a matter of fact, when you look at the S&P, Nasdaq, whatnot, well, specifically the S&P, since we kind of usually start here, the market's been pretty easy, so to speak. I don't mean by trading or individual names. I'm just referring to, let's just call it the S&P. And I'm going to have to stop calling it the market here in the current environment because the market isn't doing anything. The Nasdaq and S&P are doing one thing. The Dow, the NYSE, the Russell are doing something else. The S&P and Nasdaq are doing one thing. Overall, stocks are doing something else. Our mantra is commonly we rise and fall with the market. And when we refer to the market, we mean that most stocks are heading, a similar direction at any given time. Most indices are moving higher. Of the major indices are moving together. Well, none of that's happening right now, right? Not that that's unique. It happens, and typically we would look at that as a cause for concern. Problem is, it's not a timing tool, right? Nothing I'm getting ready to say is new. We talked about it last week and the week before, right? Um, if anything, I guess you could say it just keeps getting worse and worse and worse. So something has to give. That being said, the S&P's been pretty easy. If you just traded the SPY and said, screw it, can't trade, quote, the market because the market isn't doing one thing. I can't make a call on, quote, the market and depend on making money right now. Okay. I could sit here and say that I think the S&P is going to go higher, which we would have as of Friday. Okay. Just like it was pretty easy on Tuesday to make the call to move higher. By that, I don't mean we knew we would be right. It was easy to make the call, though. Looks like we're going higher. Right here, you break that resistance finally, probably going higher. Nice little reversal, probably going higher, right? So it's made it pretty easy to make these calls, and it has followed through. Not in the most cleanly of fashions here. It's been kind of choppy, but notice how we sat right on that and then up we went. Well, right now, it seems like we're trying to hold 5,400 before heading higher. Go to the pre-market. What are we doing? Apparently, we're heading a little higher. Well, we're flat now. Let's see what we got here. Kind of flat, I guess, right now. So we'll see. All right. So when we look at the S&P and the Nasdaq, seem to be saying higher as we come into the week. Our concern is, we talk a lot about lately, I guess you could say we've been using the percentage of stocks above the 50-day moving average. Do keep in mind, I only bring it up every week just to be consistent. I don't want to paint the impression in anybody's mind that it's the end and be all. Certainly not the only way to measure breadth. Go look at new highs from last week. All right, that's a great one to look at. You got the market, oops, messed up again. You got the S&P and Nasdaq moving higher, but look how few stocks actually hit new highs. So The moving average idea in the 50-day is kind of more of like an intermediate type time frame. It's not the 200. Okay. And on my screen, it's kind of hard to see. So someday I'll take some time to switch this up a little bit. I don't use these moving averages other than for teaching purposes, right? But I do like to keep the 50-day, which is here, and the 200, which is here, because I do think these are important, especially when it comes to the major indices, kind of where they are, so forth and so on. But the 50 days, that nice kind of intermediate thing. We're not necessarily talking about long term trend. We're not talking about day trading or necessarily even swing trading. We're just kind of talking about somewhere in the middle, you could say, right? We're talking about the average of the past 50 days. So, in order to kind of be moving higher, you kind of do have to be above, right? Now, the shorter the time frame, the problem with the shorter time frame is keep in mind, the S&P here could fall below. If you look right there, this is the 21 day. We could fall just down here, right, to 53 and a quarter again, and we would be below that. But doesn't mean anything, right? Doesn't mean we're not still trending higher. Doesn't mean we haven't still put in higher lows, right? So it wouldn't be a very good barometer per se. It could just be, if anything, just be reflective of a pullback, right? So you got to look at something bigger to know. Wait a minute, are we falling something quote bigger? So if the S&P were to fall now, as of right now, say for example below this 50-day, notice how we'd be taking out this reversal low. That would be meaningful. Okay, so if we're closing down, just call it 5,200 down here. Uh-oh, right? So you can kind of just see just by what we're looking at the difference and why something like the 50-day, a 200-day you could look at. You're looking at, what's the overall trends of everything, bigger trend. We come all the way down here and stocks are coming all the way, right? So just putting them in their proper pecking order or box. So, but I don't, just for the sake of consistency. So I don't want anyone to think that, oh my gosh, I've got to be looking at this. Nah, sometimes we're looking at BPI. Other times we might be looking at percentage of stocks hitting highs, right? So just for anyone catching this here for the first time, don't want to give the wrong impression. But last week, nice little new all-time closing high, right, on the S&P and the Nasdaq. But if you looked at the percentage of stocks above their 50-day, which I think more than just the percentage of stocks would be the trend of the percentage of stocks. And what you will see is during this stretch, percentage of stocks above the 50 days been going the other direction, diverging, right? One's going up, one's going down. Kind of like the way we look at momentum divergences here. Remember how we talked about the Dow and the larger weekly, right? Pan out here. Notice how prices hit a new high, but momentum is diverging or weakening on a larger scale. Okay, which is another one of the reasons we're concerned about the health of this market. Although Friday's little turn line was pretty adorable. Hard to put a whole lot into it considering we had a little reversal on Thursday as well and a little reversal on Tuesday as well, and the Dow just can't seem to get out of its own way. And now it looks like we're putting in like a head and shoulders type of process here. Interesting placement of it. It's not really a top. It's not really a continuation, right? It's kind of weird position, but the bottom line is, seems like we have a trend line of support to watch on the Dow. But as you can see with the Dow, notice how the Dow hasn't hit a new high in a month. That non-confirmation, right? It's okay to have a non-confirmation, say for a day, right? So the S&P hits a new high today, but the Dow doesn't. But then tomorrow it could just wipe it out, right? It could just, who cares? But the longer a non-confirmation like this persists, the more of a problem it becomes. Okay. So in other words, not a fluke thing. The Dow is saying, no, I'm not going. Just like the NYSE is saying, not only am I not going, I'm going to hit a new low from my peak. Interesting. S&P is important. That NASDAQ 100 that we're looking at is important for sure. But how many stocks are in the NASDAQ 100 and the S&P 500? How many are in the NYSE? Right? How many are in the Russell that just hit a new low from its peak? Right? And by the way, a peak that never took out the old peak. So even though we have the S&P and NASDAQ still kind of partying up like it's, I don't know, 2021, okay, most stocks are not taking part. Okay, not necessarily, I haven't looked recently, but not necessarily expanding in the new lows department, but we're also not hitting new highs. And so we're kind of seeing a very, very narrow market here. And you probably don't need me to tell you that that's typically not looked at as bullish, right? Does it mean we have to fall? Well, I don't know. It depends what you mean, right? Aren't we already falling? NASDAQ 100 hits new highs. Whoop de doo. 100 stocks. How many thousands are there in the market, right? So aren't we already dropping? So it just kind of makes you wonder or think about, how does this resolve itself? Historically, this resolves itself in the direction of stocks, right? NASDAQ 100 or the S&P or whatever can't go up forever if more and more and more and more stocks stop following, right? Stop going with. 2 weeks ago, I did a sector breakdown. Um, need a dip before moving higher with it. Yeah, I think we need a big, big dip, Doug. I think, but you know, hey, Eric, how are you? I'll go back to that MSTR in just a moment. Good morning, Lenny, everybody. Volume fixed. Okay, cool. We'll talk about Netflix. Um, cool thing is, I forgot what I was saying. Oh, 2 weeks ago, did a sector breakdown, taking a look at 11 biggest sectors, and only five of them were up, even though the S&P and Nasdaq closed at new all-time highs. Only five out of the 11 were up. What was interesting about that, within inside of that five, 40% of the gains within those five were in tech. Now, go to last week. Only four sectors out of 11. So you get the idea? The narrowing of the rally. Only four sectors were up, all right? And 70% of the gains were in the NASDAQ. Okay. So, or I'm sorry, technology. They were in tech. So you can kind of put the pieces together, right? Sure looks like the only thing taking the S&P and NASDAQ higher is just tech, right? How long can that go? Not forever. Pretty sure of that. So bottom line, be careful out there, kiddos, right? And of course, easy peasy thing here would be to do, well, I guess just buy the cues. If you want to go long, that's probably the safest thing. Although there's any number of ways to skin the cat in the market there. So just be cautious. S&P, NASDAQ came into the week, as you can see, looking like they want to head higher. But that has nothing to do with the market, okay, at this juncture. Okay. The market is fractured, splintered. We got a Dow going lower. We got the NYC going lower. We got the Russell going lower. We have most stocks down below their 50 days. So at best, they're not going higher. Okay. We have one industry seemingly doing most of the heavy lifting. So just keep that in mind when you try to make your trading decisions. Our view mostly has just been take each stock on its individual merits, right? So let's take a look at last week. One of our trades, we had L. Okay. L broke support. Okay. Keeping it simple, stupid, right? This 120 mattered, just like the 125 before mattered. Nothing cute, nothing fancy. I don't need 87 screens in front of me to see, oh, wow, break key support, probably going lower. Look at that. You get a second chance. Rally back up to it, down you go. You buy puts, right? So kind of keeping it simple, so to speak. We had, and stock specific, really loved the reversal on end phase going into the start of next week. Loved that turnaround. It had been moving higher. Seemed like we had an obvious target. All right. So you ready to take some notes? Okay. You're going to have to write all this down. I hope you got a lot of room. We bought calls. Any questions? All right. I know, just take your time, think about it. Right. We saw something look good, had a target, we bought calls. Didn't use any moving averages, no VWAP, no Bollinger Band, no Fibonacci, no Elliott Wave, right? So keep it simple, right? You're probably gonna do a lot better, and that's all we're doing. We do that anyway, but in this environment, we're just looking, okay, what looks good, what looks bad, what's breaking up, what's breaking down. And then, of course, we love to play indecisiveness as well. Okay, so something like SMCI, we're a big fan of this guy. Just something that can move. Like, hey, market, I don't trust you to go higher. I don't trust you to go lower. I don't trust you to do anything. So let's go find something that's just moving. Okay. Something that's moving around enough to where, hey, I think higher, but I'm also going to hedge my bets. Right. So we do a lot of prime time has become very common with the hedging slash strangling type process. So this is the one we kind of crushed. This wasn't the only one. I keep forgetting because this was the last trade we're in, but we actually did pretty well with ASML. ASML popped into this nice little triangle. Okay. We would perceive this as bullish, obviously NASDAQ, right? Tech. So we're thinking, hey, we're going to go long, which is what we did. And I don't believe, pretty sure we only had calls on this. But then once it jumped, we added puts in expectation of a fall maybe back to 1050. So we end up profiting on this one as well, on both sides, the calls and the puts. What we didn't expect necessarily was that, but by that point we were out of it. Right? We thought we'd hold that breakout point. And then this guy is how we kind of made most of our gains. This one's a little bit complicated on what we did here. I have to really think about that one. I did a lot on that. Okay. Let's think about this. And those of you on the call, I see a lot of primetime members on here. Correct me if at any point I'm wrong. But we started with that's I remember. Never mind. I remember what we did. We didn't hedge ASML. All right, so we didn't actually hedge this. We had calls. Okay. As I said, we didn't add the puts till after we jumped. Okay. But we did hedge this. We hedged it with our first SMCI trade that we lost on. We bought puts, right? So this one seemed to be setting up more of like a descending triangle, right? After the fall, not moving with the market, right? So nothing good going on here. Looked like it was dying to break this little shelf. So that's what we did. Instead of just simply buying a strangle in ASML or a strangle in SMCI, we kind of strangled the market, as we called it. So we went long on ASML, something that looked good. We went short on something that looked, at least that we thought, bad at the time. So we bought the puts here. So we lost on these puts, gained on the ASML. When this guy turned around, this was Thursday morning, we bought the puts again. And I believe we started with, well, 7 somethings. But then we added the 8:15 calls. This was Friday morning, right? So we're doing a live room. Did the 8:15 calls that, as you can see, worked out. But as this thing shot up, we actually sold the 8:55 calls against this to take in. I believe it was somewhere around, I don't know what it was, like $10, $12. So we did that. Well, the reason why, a couple things. We had, if this thing kept shooting up, which it did, we had $40 in profit in between there, right? So as long as the stock closed above 855, okay, at the time we put this on, we didn't hold this all the way through to Friday. As long as it was above 855, we have $40 there. So so we cap ourselves, but by doing the sell against, what that did is it allowed us to pay for rolling our puts up. So bringing up the bottom, if that makes sense to those of you that aren't prime time. This is that kind of chess match I talk about where you really have to think about the different moves and how we're trying to, on one hand, force and or catch the gain, right? On the other hand, we're trying to reduce risk. So we do cap our gains here, but that's in exchange for limiting our downside exposure, right? Which I think most of you probably know, right? Managing risk. Think of left bar, right bar in euchre, right? We got to do both. Making gains are awesome, but we want to bring up that upside. So sometimes we will sacrifice upside potential if it means we can take all risk off the table, which we had, right? So at the point, this was going into Thursday. So at that point, we had the 800 puts. Why the 800 puts? Why did we roll up to 800? Because our thought was if this thing reversed lower, the target would be 800, right? The premiums would inflate. We could take those off if we wanted, or we could say, wow, that's a disgusting reversal, probably going lower and stay in it, right? But mostly we're trying to limit the stock's ability to focus in the eye, right? So we start with puts. I don't remember where they were. I want to say it was like down here, 750 or something, 760, somewhere down here. And then once this thing started to push up, we immediately bought the 815 calls. As it pushed higher, we sold the 855 calls against, turning this into a vertical. Took that money. The only reason we sold was because we didn't want to spend more money. And we used some of that to bring those puts all the way up to this. So bring that floor up. So if you try to take all my call profits from me, you're going to have to pay me with those puts, right? That's what we're doing. Obviously kept going higher. So we ended up rolling these puts up again to the 845s this time. So now put it all together. We have the 815 calls. We have the short leg at the 855s. We now have 845 puts. And what we had done in that scenario is we had now protected $10 in profit. In other words, between 815, our long calls, and the 845 long puts, $30 that we have now protected. You can't take $30 of the call from me because you're going to have to go below 845, in which case you're going to be paying me from those puts. So we sandwiched it and we had this in a position where we were going to make no less than 10 points. Think of that as like $1, right? So, and then multiply that times the number of contracts you have. So we speak in points. But as much as 20, as long as it closed above 855, our short leg. Eventually, later in the day on Thursday, it became clear that our max profit was 20 points. We had 19. So I took it all off the table. So, and then we decided to go back in Friday. And as you can see, kind of depending on some volatility, we never got. So, wah, wah. But we still came away pretty profitably. I just, we gave some back there. So I know a lot happening there, but uh, the members of Primetime have been there. Most of them have been there for years. They kind of get the drift. But all right, so that was a good time. As I mentioned, with the end phase, Al was. Let's see. Let me take a look here. What were the Gambit trades from last week? I know we had two. I think it was two. Let me double check. So that was Primetime. Primetime was. Primetime's had a great year. I think Primetime is up. Let's see, where's Gambit? Gambit, we did. Oh, we did the same thing. LRCX and URI though. We actually managed to profit on both. We did the exact same thing. We went long the one that looked good, the one that had broke out. Okay, took out our little trend line there, tested 1, 2, 3, 4 times, right? And 1,000. We went long going into the FOMC, right? Um, Over the past X amount of years that we've been keeping track. Um, I mean, trading the FOMC is about as easy as money as it gets. As long as you're on the right side of it, as long as you are doing that, uh, calling the market, let me put it that way, let me rephrase that, is about as easy as it gets. Being in the right stocks, not as always easy as it gets. But anyway, so we went long that. That's where we profited. Took those off, but we hedged it with URI puts. URI had looked terrible. And once we had our gain in LRCX, we took this off for a very small gain. Obviously, worth noting, had we stayed in it, it hit the exact 600 target that we put on. Because when we put these on, we didn't know the market would head higher, right? We didn't know where Tuesday was going to close, right? We put these on early Tuesday. It wasn't until late Tuesday that we realized that, oh, market's probably going higher on Wednesday. So when we put this on, it was, well, if this breaks, 600 is our target. So this could have been a monster winner. For some, it was. I know some members stayed in. All right, take a look here. Still flat, still doing nothing. Hey, we just opened. We're open for business. All right. So we did those trades. What else we do? That's about it. All right, so we're open here. And yeah, let's take a look at some of these. Let's go back to MSTR, Eric. So right here is what I'm following. Okay, and again, if you look at these lows, kind of right, it's right around 1440, and up here is 1740. So we're kind of sandwiched here in this $300 range. Okay, I don't know that I try to play this range. It's pretty choppy, but the break above 1740 would seem to confirm you're running here. a break below 1440, I would say definitely you're falling to 1200. But I think the more obvious target is here. So that's why I had this kind of on my watch list this week. I want to kind of see if maybe we did get a break like that. Um, New highs, no way. I'm not buying it. Everybody up here. And if you look at some major bear markets and corrections, it's not uncommon for the Nasdaq to kind of go at a low at the end. So it's another thing, just worth noting. And I'm not trying to make the case that's what's happening, but you can't deny that the market isn't like this strong bull market right now. It's very weak. Momentum is weak. Breadth is weak. Everything's weak. So typically this precedes falls. But if you go back to say, I mean, just the first one off the top of my head is the 2007 the financial crisis bear. If you go back there, can't believe I have to go back this far now. Right. So if you go back, here's your S&P high. Right. It's also the same time the Dow hit its high. Right. So it's going to be October 2007. But if you look at the Nasdaq, or in this case the Nasdaq 100, you'll see you're going to go right in the month later in November, beginning of November. Right. So it's not an uncommon thing. Same thing happened 2015-16, that little correction. We kind of petered out right in this area. Hit some final highs. The S&P, the Dow, nobody else hit. So it's not an uncommon thing. Could be seeing it now. And I think most, if you're, somewhat of a active market participant, you kind of know between AI and semis and all that kind of stuff, that's where a lot of the gains are coming from. But anyway, all right. So we got that one. What was the other one? Somebody asked about Netflix. Let's take a look at the Netflix. I took Netflix off my list. I just didn't really like what it was doing anymore. It's not quite what it used to be, but nice little pop there on Friday. I mean, if the Nasdaq can hold up here, I think you could target running to 700. Might be a little. Oh wow! Wait a minute. Say, wait a minute. Something's wrong. I'll try that again. You can take a real long shot up there. I don't know that I would. Like I said, I'm a big fan of the market here. Got about $1 for those 700s. So anywhere up to $10 if that thing wants to shoot up there. But certainly a nice day on Friday. We're pretty big fans of SMCI. We've tried to do just these ones that kind of fly around a little bit. But you got to time it right. Obviously, you have to pick the right strikes. We like to wait till later in the week with prime time so we get the premiums down a little bit. Um, but the bulk of our gains, I think, this entire year have probably been right here with SMCI. Like I said, our ASML trade was pretty nice too. But as it pertains to prime time, we've stopped. We haven't tried near as much for the high percentage gains as much as we've tried for a little bit higher probability but larger gains. So we have to put a lot more into SMCI, but we've done it in a way that the gains are a little bit higher probability. So we've done pretty well with it. We don't typically do something like this on a Monday. It's kind of pricey to try to do. Although I don't particularly hate where it's at right now. 30, so there could be a trade there. But there's no service that I currently operate that would make sense for this. Gambit doesn't trade things like this. Smart trades ETFs in prime time. Doesn't start till tomorrow. Plus, you go into tomorrow afternoon. You basically milked out 2 days of time, and that could create an even better opportunity. But I don't hate where this thing currently sits. All right, let's take a look at everybody else. See where we are at. It's like mostly red. Another one set up a watch for smart trades. Right now, the only thing smart trades in is TLT. Which I think is going higher. But we were also watching gold. So watching two things on here. One, what looks like potential for a bullish wedge. Two, the support down here, right? This kind of rectangle you see here. Now, if gold were to roll over, come down, you kind of have a double whammy. You break below, could say put in the equivalent of a double top, and I'd be looking for a fall back down to here, probably here. Flip side of that would be, breaking through the top of this wedge would imply a run back to 2450. Break above 2450. Now you're targeting things like 2600 and such. And of course, how would we play it? With our buddy the GLD. So now if this goes down, this would be a smart trade that we would put on in all likelihood. Maybe. All right. Let's see. Just covered the TLT, William. There. So far so good. We have. If you're referring to the trade, or are you asking just about TLT? If you're referring to the trade, right? Um, we have so much time in that. I would chalk that almost to an I don't care, because there's just nothing we would do in it anytime soon. I don't want to. I have no intention of doing any kind of rolling or anything at this stage because there's so much time. We are not in even remotely in an area of profitability that justifies taking it off. So we're not going to do anything. So there's just not a whole lot to talk about, really. MSTR. Well, I don't know about 1450. Like I said, I was kind of saying 1440 when we look. Whoops, 1440 when you look a little closer. And by break, if you know me, I'm not talking about an intraday. That's not a break, right? That's an intraday break. Okay, but we see that stuff all the time. Okay, and then it comes right back up and holds. So I want to see it fail to hold an actual break, right? So look where we are. Did it break or not? No, not yet. Of course, every close, every break, as I define it, starts as an intraday break, and people are more than welcome to kind of not wait for the close. Um, just think of it as if you wait for the close, higher probability. Flip side of that, wait for the close, you might miss the trade altogether, right? But as you can see right now, it's goofing off, holding. And so that's why I want to wait to the end of the day. We don't necessarily have to get the close, but this is why I like the last 30 minutes of the day. All right. If I can see this thing below 1440 towards the end of the day, where then I have some confidence that it is going to close below 1440, right? Then I would put the trade on, not wait for the close. But otherwise, um, I would need to see other factors before I get in on an intraday break, if you will. So I'd kind of wait. But yes, once it finally breaks down, and again, I would prefer taking out that 1400 as well, if given the choice. Oh, Eric, I just saw the second part of your question. You could do both, but as you know, these premiums are awfully pricey, right? If you want to try to go out, like say if you want to go out 2 weeks, right? They're going to make you pay for it. Now, if it broke, and it gets kind of thin out here too, by the way, real thin, right? But in theory, I don't know, you could get these 1000s for $3 or $4, maybe. But that's a pretty, I mean, 2 weeks. I don't know if that's enough time to get there, right? So yeah, a lot happening on that front. CMG Chipotle looking good, looking real good. Wonder when this thing will do a split. I kind of feel like the breakout was back here, right there. But yeah, it's kind of a two-part thing. Okay, great. I think it's going to go higher, but does that mean I can trade it though? Does it mean that there's an actual trade there that I want to make? And that's obviously like even if you wait a minute, I was like, that can't be. Get back up here. Wow. All right, let's try that again. So I don't know. Let's say you want to target 3,500 here. So if you went up there, again, kind of like MSTR, pretty thin, but as long as you know the risks involved there, you what I don't know, get the 3,500 for like $9. Call it $10, right? Well, if you come down here, if it gets there, even instantly, you're closing it out for 40, right? So I don't know that I like that gain for that kind of risk. Well, there might be a different trade there. I don't know. And your 3,400s, I can't imagine. Yeah, it's also kind of thin. But overall, simply bottom line, definitely got to like this was the move here on Thursday. Came back down, kind of tested the old resistance area, and then up we go. So if you would have asked me this question on Friday, I would have loved this as a long play. This stage, I don't know, kind of looking at it as maybe kind of missed it there. What are my thoughts on Nugget being more? Well, it is. It's a leverage ETF. So if you're feeling a little bit naughty, right? That's what these are for. And the other one I think is Dust. So yeah, that's what they're supposed to do. So if you kind of like, I don't know, gold breaks out and you want to, you know, really capitalize on it, just always remember these don't, because of how they're leveraged and how they're recalibrated, so to speak. The Gotta be real careful about how you're trading those things. I tend to stay away from this. The close we ever got, I think, was when we did um, for the biotech. We did this a while back. I think it was this one. But you really, really have to have a high degree of confidence that's going to go your way. And these aren't certainly aren't buy and holds, right? So, oh, Mike, okay, 50 to 1 split. All right, there you have it. Let's see, I wonder when that did I say that out loud? Because I was thinking to myself, I wonder if this thing's ever going to split. This is pretty neat if you watch it. Right? Kind of rallies for a while, sideways range, breaks out, sideways range, breaks out, sideways range, breaks out, sideways range, breaks out. We don't really watch it. I mean, this was obviously pretty straightforward break here too. You kind of see this along the way. It's made it pretty clear for everybody. It's not something that I follow, but look at that. So at this point, you can wait for it to go into another sideways range. But one would think it's moving higher, right? So if you kind of look at these breaks and what it's doing, one would think this isn't the end of it. And the most obvious target would be something in that 3,500 area, I would think, for this determination of this most recent leg up. So, All right. Yeah, yeah. I think market closed Wednesday. Yeah. Yeah. Well, I think we're canceling all calls that day, I would assume. Let me take a look. I'll look here at my Bitcoin chart. See what I had is like next level down. 65 doesn't sound familiar, but let me look. Bitcoin. Let me. Um, I'm gonna go with a maybe on that front. I mean, most of the support seems coming around 60. Hmm. All right. So there you have it. I'd be cautious. So I'll tell you what, that SMCI trade would have worked out. Yeah, looks like it's going to work out. So I don't know. Maybe we'll put on an early trade for prime time. Prime time. But all right, good deal. So like I said, hey, S&P down or S&P Nasdaq keep doing the thing, but they can't. I don't know that you could base that. What to do with your trades on that because nothing is supporting that move, right? So there's no reason to believe that. I want to know that hey, if I quote think the market's going to go higher, I can blindly close my eyes and buy calls and probably do all right. This isn't that market, right? At this point, your best bets are just blindly closing your eyes and buying puts, right? Even with the S&P and Nasdaq doing what they're doing, because we know most stocks, more and more and more stocks are moving lower, right? So again, we think about that stocks above 50-day and how it's trending lower. More and more stocks are saying, nope, I'm done. Okay. So if you think about it, your best bet, am I saying go out there and buy a bunch of puts? No, I'm just saying if you think about what the market's doing, going long doesn't make a whole lot of sense. Even if, right, the S&P and Nasdaq want to continue to going higher because the overall market is not doing that. So just be cautious. Um, don't be surprised. You know, so remember July, August, specifically August, we've seen some unfriendly moves there. But otherwise, all right. So we got all this worked out this week. So that's kind of cool. Oh, there's a whole bunch of questions here. Oh no, I only missed a couple. Uh, I don't even know what is that. Oh, that's right, Tesla. Yeah, that's kind of fun. I think we traded it one time. All right, everybody, have a great one. And yes, I think for us, prime time is the only thing we'd be missing on Wednesday. So no prime time calls on Wednesday. I'm going to guess some alerts will go out, but I'll remind everybody tomorrow and during prime time at 3:30. So, all right, everyone, have a great week. We'll do it again next Monday. Take care.